Now, last Wednesday, the webinar, this is the New Zealand Stock Exchange for those watching around the world, joined up with Syndex. This is an online investment platform for the private markets, providing digital infrastructure for enhanced private market investing. And they've announced a partnership, this is NZX and Syndex, to support and nurture private companies from the first capital raise all the way through to potentially a public listing. Well, why are we talking about this? There's very few companies on the NZX that derive their revenue from the growth of industry of agriculture here, which is the backbone, we believe, of our economy going forward. This is the primary sector. Is there alternative ways to put your capital to work? Ross Verry believes so, and he joins us now from Syndex. It's a very funny time out there with the lowest interest rates in history. I mean, people are looking left, right and centre under the pillow in terms of where to put their cash.
Yeah, they are. And it's a real challenge for some people because they've relied on that income from, perhaps more traditional investments over time to, to support their lifestyle and particularly some of the, the more elder people, more mature parts of our population who, aren't necessarily working a 40-hour week. They really rely on that investment to live off. And so we've, and I guess, one of the opportunities that we've seen, Sarah, is in the primary sector. And the reason we see it is because, we do see good returns coming out of the primary sector. And historically, the primary sector has performed very well. It's just been a matter of being able to provide structures which investors felt confident investing into. That's
an interesting part. The structures going into the industry have varied across multiple different concepts, from the likes of $100,000 minimum to be a part of it, through to we had the New Zealand Rural Land Company the other day as well, but they were more only interested in very high, large corporate farms. For those who are wanting to acquire capital from private sources and the security of where these investments are going into, can you paint that picture of that structure?
Yeah, look, I think historically, Sarah, there's been a few barriers to investing into agriculture. And, one of them was the big upfront payment that you might have to make. So I guess, at one extreme, maybe you have to buy a farm or an orchard or, own it 100%. Then I guess there was a development into some proportionally owned structures, so equity partnerships and syndicates, and that enabled a wider range of people to get into primary sector investments. And some of them did so very successfully. But there were also a number of people who I suppose were a little shy of going into those proportionally owned type structures for a couple of reasons. One being liquidity, and meaning that if you actually needed the money, and sometimes you do for personal reasons, for family reasons, there wasn't a market to exit yourself from that investment. Two, because fundamentally these sort of assets were generally very private assets, so it was hard to get information on how the asset was performing, because I guess, historically the owners haven't had to share a lot of information, they're private assets. So those are two issues that we've tried to solve for. We've said, right, we can provide a trading platform whereby people can go into and out of proportionally owned agri investments on a secondary market. But, in doing that, let's say the issuer or the underlying manager of those assets has to commit to providing good quality assets and good governance, good quality information and good governance of those assets, if they are expecting to get money from external investors. And there's a really diverse range at the moment, Sarah. I mean, you mentioned New Zealand Rural Land Co, and that's spent a little bit of time listed on Syndex, so it's a great example of how the NZX partnership could work. Listed on Syndex, obviously it attracted enough interest from the information provided, so that the New Zealand Rural Land Co managers felt confident that they would have success if they were to list publicly. And that's a structure whereby the investors are offered ownership in the land, not the entire business, just the land. And, they will lease that land to good quality operators who will provide a return to the landowners. Now, that structure has become really popular. This one is, in the first instance, going to be focused on dairy. That's where the managers think the best opportunity is right now. But I guess what it's doing is it's saying that you can get return from an investment that you understand, and you've got less exposure to the operations, which you probably aren't capable of managing yourself as an investor, and perhaps less exposure to the international commodity markets. So for those investors who we talked about before, who need the income, they know that they're going to get a consistent return, hopefully year in, year out. So that sort of separation between land ownership and operations has become quite popular. That's a public, or it will be a public issue. There's a lot of horticultural type syndicates that are and funds that are in the market now too, where you can invest again, perhaps 50,000, perhaps 100,000. Some of them will be split into smaller parcels, but I guess still quite significant amounts. But again, you can get that exposure more to the land than necessarily the operations. So I think that's been a piece of innovation that we've seen over the last 2 or 3 years.
I've got a couple of last questions for you. One is around a mixed family succession option beyond a bank's capability and the ability to grow businesses through actually seeing out that we don't need to have this intergenerational 100% ownership to carry on a legacy.
Yeah, and I mean, that's a issue that the industry and lots of industries, actually just private companies generally, have been grappling with for some time. And again, we think there's solutions there because, to I suppose follow up on Adrian Orr's, suggestion or recommendation that we start putting our capital to work. I mean, I think that that investors, outside the family farm ownership model, are becoming more knowledgeable, more attracted to primary sector investments, and with a little bit of innovation from advisors, and we obviously think that we can provide, I guess, structures and in a way that allows people to invest with confidence. That we think there is the ability for, and it's could be in a debt form outside banks, could be in an equity form, to provide almost a bridging type funding, solution whilst that intergenerational succession is undertaken.
How faceless are the investors? Because there's a term smart money, where you're actually bringing both an expertise and cash to the table, which can have significantly more value than the money itself.
Yeah, that's a really good point. And I think, one of the things that we encourage when we're trying to match investors' money with the investment itself, or the let's say the original owners who might be looking for external capital, is mutual due diligence. So the investor would naturally and logically undertake some due diligence on the investment they're putting the money into. I think it's equally, if not more important, for I suppose the sellers of that equity in their business to be really clear and really careful that the investors coming in, one, sort of share the same sort of values, and you understand each other's investment horizons, but then also sort of test whether they can add value in some other way, and it's probably a very simple example, but maybe someone can bring some really good financial management skills. That's that's quite possible. Maybe.
Yeah, and one thing, lastly, Ross, is my biggest criticism to the industry as a whole has been because of the way our capital flows and is restricted and we've seen the rise in the cash flow, short-term cash flow of dairy grazing being because it's a return-based system. Investors want instant returns, and farming's not naturally all about that. If we want to have long-term growth in multiple different export markets, we need investors of capital with confidence in a longer term rather than that short-term return. Is there an appetite for that?
Yeah, absolutely. And I think the criticism would also come from the other side, where the investors would say, where are the opportunities to invest for the long term? So I think there, on both sides of the transaction, there is a real willingness to invest for as long as possible. I mean, I think you've got to accept that sometimes situations change and people might need access to their money as an investor. But I suppose, and sometimes the business itself, they might be in a position where they could repay or purchase back that investment. So I think generally there's a willingness for both sides to enter into a long-term transaction. I think the investment community certainly sees, and you look at some of those really wealthy intergenerational families, they have always got land as a long-term asset in their investment portfolio, and absolutely very committed to it. So I think the proof in the pudding is in the eating. That's land and agriculture plays a really important part in investment portfolios globally.
Absolutely, 100%. Ross Verry there from Syndex.
This is Sarah's Country.